Look at the requirement for question 2. So it says that commencing with profit before tax, usually it's like that lah. Compute chargeable income for hybrid for year of assessment 2012. Number 1, you are not required to compute the tax. Number 2, indicate by the use of the word nil for any item referred to the question. Any item you see in the question, not only in the note, in the question, that no adjusting entries are needed, and you need to show workings for CA 26 marks. Okay, as usual, the technique to handle corporate tax is the same. Focus on the P&L. Hybrid is Malaysian resident company. Activity is manufacturing hybrid car. Now year end is 30th June. So for year ended 30th June 2012, that's the financial statement. So please, before we start, look at the financial statement and look for anything that there is no note. Okay, so here we see everything carries note. So the gain, yes. The interest also, yes. Okay, audit fee, can you claim deduction? Yes. Secretary fee, yes or no? No, you must have back. Interest expense come with note. That's it. All come with note except these two. Right, so this is what we're going to do now. Let's prepare the space. Notes per question, description, then minus plus. Profit before tax 6004. So there's two things that we got to adjust first. One is the audit fee. There's no note, right? So we adjust first in case later we left it out. So just put a nil. And the secretarial fee is 8,000. Right, so now we can start off with note 1. Right, it says that sales includes compensation of 38,000 for loss of profits for 2 days received from a gas supplier because of a faulty installation which caused a minor disruption to the factory operation. Now this is obviously a compensation that you receive lah. Agree? Because your sales refer to your revenue. So when they say compensation for loss of profit, now when you lose profit, then people compensate you, right? So that's why this is an income. So now the question is this income taxable? Now very simple, to decide taxable or not, we ask ourselves, what is the compensation for? It's for loss of profit. Now profit by itself, is it taxable? business income, what is business profit? Yes. So if business profit is taxable, then the replacement of the profit must also be taxable. So in that case, the compensation is nil. Okay? It's under the minus column. Okay? It's an income that is not taxable. Right? Note 2. The cost of sales included depreciation 2.6 million for plant and machinery. Well, that one is very straightforward, right? Depreciation, can or cannot deduct? Cannot, right? So just add back 2.6 million. Okay, note 3. What is note 3? HSB disposed some share which had been held for investment. So I don't see any number. Just look back into the P&L and see what's note 3. Then look at the P&L, you see note 3 is gain on disposal of share. Now when you dispose investment, the gain is what? Capital, right? So in that case, what do? You minus. So gain on disposal of shares minus 750. Okay, note 4. Now note 4, the note says that the interest income arose from the unconvertible loan stock costing 250,000, which were held throughout the year. Now that means the company spent 250,000 invest in loan stock. You buy loan stock. The cost is the cost of your investment, okay? And at the same time, examiner also explained that the interest expense arose from the borrowing, that the loan outstanding throughout the year was 500,000. What is this? Okay, you read and see where is the note 4. There were 2 note 4 in the question. One is the 26,000 income. 2 is the 12,000 expense. The 2 note 4. Now first, this 26,000 is what income is this? Section 4. 4C, right? So if 4C, what do you do now in the tax com? What do you do? This is what? This is business, right? So what do you do when you see interest? You take it up. So we will have to minus the interest income from loan stock. We take it out. The income is 26,000. Then note 4 again. So what's this note 4 right now? Interest expense. And what did you all learn about interest expense when we covered deduction? We said the deduction for interest is depending on how you utilize the loan. If you recall the example I gave in the note, I can't remember the name. There's this guy that take a loan, he buy machine, he buy shop house. Then I say you must see how much you spend the money, and then you must apportion the interest back to the source. So now in this case, you borrow 500,000. You borrow 500,000, and you have an interest of 12,000. But then 250,000 you invested in the loan stock, and this loan stock give rise to section 4C income. Then can I claim the entire 12,000 in the business? No, right? Doesn't make sense, right? So what do? You must take out, okay? You must take out the portion of the interest to do with the loan stock, so that you minus later under the interest income. That's why what we must do now is we have to take it out. Now it's half of the loan. That means the 250,000 out of the 500. Now it's half, so it's very hard to see. This 250 is the amount you use to buy the loan stock. The other 250 is not mentioned. Not mentioned means you must have used it for the business. So that's why the one you claim, no problem. So we multiply by 12,000. So we must add back 6,000. And later, when you do your tax com for the interest, now you don't need to do this, I just want to show you like that. So later, these two figures, you got to show under 4C again, because income is 26, expense is 6. But of course, you must ask yourself that 26 got exemption or no exemption. If you got exemption, then you don't tax. If no exemption, then you tax, then you minus the 6,000. Follow, okay? Right, so that's note 4 now. Okay, go on with note 5. Now HSB paid the equivalent of 10,000 ringgit to a non-resident company for services performed overseas relating to testing of its exported product. Now no withholding tax was deducted on this payment. So this is a payment to non-resident for overseas service. Now the question mentioned that no withholding tax was deducted. So actually what they are trying to test you is, do you need withholding tax or not? Because if you need withholding tax and you never hold back the money, you can't claim deduction. So now the issue is, what withholding tax do you have here? It's for which one? Services for testing product. Which withholding tax is that? We have withholding tax for royalty, interest, public entertainer, special classes of income, other income. That's 5. Which one is this? Special class. Okay. Now under special class, there are 3 groups. First one is for installation. Okay. The other one is the technical and administration payment. The third one is rental of movable property. Now this one should fall into the second one, correct or not? It should be some kind of technical payment. But then if you look at this so-called technical payment, you will need to know whether if this is Malaysia derived. Now to be Malaysia derived, what do you need? What's the condition? Service must be performed in Malaysia. Alright, there's a condition. Service must be performed in Malaysia. But the service performed overseas. So if service performed overseas, then there's no issue, right? It's not Malaysia derived. You see, if it's not Malaysia derived, then you do not need a withholding tax. So you never withhold, but you do not need to withhold. So there's no issue. So in that case, you can claim deduction. Go ahead. Right, note 6. The staff costs include 3,000 ringgit for a member sent on a postgraduate training in electronic. Now, training for postgraduate electronic, and is approved by the minister. See, I've told you all before, there's quite a lot of double deduction for approved training. And I've told you that the tips in the exam is you look for the word approval. Because why would a training be approved in the first place? I mean, if you don't get approval, there's no double deduction. And there's a lot of reason why you get approval. But I say you don't have to remember the details. You just remember the word approved. So it's good enough already. If you don't get approval, there's no double deduction. So examiner has to tell you, he has to say that this is approved. So when you see that the training is approved, understood, it's the double deduction. So don't have to remember details, so you know what to do with this thing. So note 6, approved training costs, 3,000. 7. Right, the travelling and accommodation expenses included leave passage for senior management personnel, 11,000 ringgit, which comprise overseas trip, local trip. Now, do you claim deduction for leave passage? Can you? Deduction for leave passage? No, right? Section 39 clearly says that leave passage to employee, whether it's overseas or Malaysia, are all disallowed. There's only one kind of leave passage you can claim, which is local annual event. All the family and their worker, employer all join together. So that's the only one that they allow you to claim. So in this case, leave passage in general, you're not allowed to claim. So the leave passage expenses 5 and 6, both 11,000 must have back. Note 8. The general provision for doubtful debt trade account made up as follows. The balance brought forward, provision created during the year, amount returned back, amount written off, amount returned back, balance carry forward. That's it. That's the note. Okay. Now we did this before when I explained deduction chapter to you. Why don't you try again? We tried before. Okay. And see whether you still get the correct answer or you still don't know how to do. Give me the answer. Now, the questions mention that balance brought forward is 520. Okay. Now they made the provision 200,000. All right. They made a provision 200,000. Now then they also mentioned that that's amount written off and amount written back. So you write off 30,000. That means you cancel off 30,000 from the provision account. Okay, from the general provision. Now these are bad debts written off. Now they also mentioned that there's an amount written back. Written back means you release back. Okay. So if you release back, then you release back the 70,000. So that's how balance carried down become 620. Now this is the P account to reconcile. That's why in the P&L, okay, in the P&L, it's clear that we made a provision 200, okay, we release a provision 70, bad debt written off, it never goes to P&L. And there's a reason why in the P&L the adjustment is 130. You must go back and check how much is the amount charged to the account. Is 130. Now knowing that these are the three things we have inside so-called the doubtful debt account, then you must ask yourself, what is your treatment? Now a general provision is not deductible, okay? And the release of a general provision is not taxable as well. But when this amount is being written off, the loss is a realized loss, right? And if it's a realized loss, then deduction is given because we have never claimed a deduction at provision stage. It's different if this is specific, then different. Specific, you already claim when you provide. That's why write off, you cannot claim. But now you provide, you cannot claim. So you write off, you claim. Okay? Now, so if you know these are the three things, then the three things goes to the answer. So I just put back into the answer. So note 8. The general provision made 200. I add back. The release of provision 70 is an income, so I will take it out. And then the bad debts written off, now this one you can claim, you have not claimed, so I'm going to claim now, so minus 30. Okay. Now if you show your answer as net plus 100, okay, but you show a breakdown and then write down plus minus in the working, no problem, full mark. But if you just show plus 100 without detail, sorry, no mark, because we don't know how you get 100. Remember I've told you, if you just take 520 and 620, you minus also 100. So that's why end of the day, you have to show us the working. Okay? Right, there's note 8. Okay, note 9. Right, included in repair and maintenance is 8,000, which relates to repair to a damaged office floor. Repair. Is there any issue to claim deductions for repair? No? No, right? The only issue is that you can't claim deduction for repair is what? If you buy an asset second-hand, dilapidated, the asset is not functioning, then you spend a lot of money to repair. That one is different. It's not repair, right? You can call it repair, but we know it's a reconstruction of asset. That one cannot. The other one is what? A repair that carries improvement. That means you do an entire replacement. You make it better. Follow no? But this repair is an ordinary repair, right? There's damaged office floor and you repair. There's no issue. It's just a normal repair. So the 8,000 new. Okay, note 10. Now the foreign exchange gain. See what's note 10. See, note 10 show a gain. That's why you see figure is negative. it's reducing your expense. That's why it's an income. Okay, there's a gain of 10,000. Right, the foreign exchange gain represent a realized gain of 10,000 ringgit that you settle to suppliers related to a plant machinery acquired on 31st March 2012. Now the gain or loss is deductible or not depends on two things. Number one, is it realized? Number two, what is the purpose? If it's unrealized, you don't need to read lah. Sure cannot. Okay? If it's realized, you must see what is the purpose. Now this is realized and the purpose is buy plant machinery. Now when you buy plant machinery, this is capital, right? So if capital, then the gain is capital, then it's okay, you don't tax it. Now they also mentioned that the total cost of the machine acquired is 310 before adjusting the forex. And what is the ratios that we see here when you tell us something like that? CA. Do you need me to calculate CA? Now I don't know. I must read the question and see whether the note mentioned whether everything is taken into account. So in the exam, please put a note and remind yourself later, come back, look at this thing again. Okay? Now, so far in note 10, the issue is a realized forex gain 10,000. Okay, note 11. HSB contributed books worth 120,000 to the National Public Library and donated cash 800,000 to Help Always, an approved charitable institution. Now, first, you donated books to library. Now, library, you get deduction under 34, right? That the maximum is 100,000. You don't have to be cash, what? That's under 34. So anyway, the amount is 120, so you have to add back 20k. Now the cash donation you have to claim later on at the bottom, so you add back the whole thing, 800k. Right, note 12. Now information technology expenses related to improvement of management processes. Now this is a very old deduction. Okay, there's nothing special over here. The law allows a deduction for this kind of IT expenses. So the P&L shows the amount is note 12, 5,000. Okay, note 12, 5,000. So the IT expenses to improve management process, nil. Okay, note 13. Right, entertainment comprised of staff entertainment, supplier entertainment. Now staff entertainment is given full deduction, so nil. Suppliers entertainment is disallowed by half, so 88, 50%, so we add back 44. Note 14. Right, details of the lease rentals are as follow. So car 1, I show the note first. Car 1 is non-commercial. Okay. Now the cost is 110,000. Car 2 non-commercial. The cost is 190. Lorry is commercial. Okay, lorry is commercial. Now, so they've given us the rentals that you've charged for the past 3 years. 10, 24, 24, 30, 30, 36, and so on. Okay. Now, if it's commercial, there is no limit. Agree? Okay, so car 1, will there be a limit? Now, what's the limit for car number 1? Well, again, this is very subject to argument, right? You never tell me whether the car is new or used car. So in that case, as I say, you assume. Sometimes you cannot expect question cover everything. Yeah, examiner also get carried away when they design the question, and it was not picked up when the assessor checked the question. Okay, so assessor also is not doing a very good job. Okay, now so if you're not sure, then you assume. So if you assume that this is a used car, then the maximum is 50. If you assume that it's a new car, then the maximum is 100. Alright? Now this directed car, that one is okay. Because new or used also there's no difference, right? Because the value exceeded 150,000. So maximum definitely is 50. Okay, so if that's the case, car 1. Now I'll assume that it's a new car. So I'll get 100,000 deduction in total. Then 10, 24, 24 means fully deductible, no adjustment. Okay, car number 2. Now, you look at the numbers, you can get the answer already, right? You already claimed 30,000 in 2011. How much more can you claim? Another 20. So what's your adjustment? You add back 10. Okay. Maximum deduction in YA12 is 20. So we add back 10,000. Then lorry, no limit, new. Now examiner never asked you all to explain, so it's easier for us. No issue here. Okay. Right, what's note 15? Now the capital allowances for the asset acquired by HSB prior to 2012 have been computed at 1.3 million. Now that's prior to last year. Okay? The capital allowance for asset acquired during the year has to be calculated. So you're doing it yourself. Okay? The note is very clear, right? So that's why you have to do calculation for the start. There is a balancing charge 120, balancing allowance 20, and there's a brought forward loss 922. Okay, fine. We work out the CA. So before that, we cast the figure first. $889. Right, balancing charge is 120. Balancing allowance is 20. And then capital allowance. Okay. Right, try work out for me what's the CA. Now the CA is given is 1.3. You just need to calculate how much is the CA for the new plant. What's your qualifying plant expenditure? 310,000 is the cost, right? And what do you do? Plus or minus? Huh? Plus or minus? Forex gain. You made a gain, your cost goes up or go down? You made a gain. You made a gain, your cost goes up or go down? Huh? Wow, so difficult. You made a gain, hello, you made a gain. If you made a gain, so your cost is higher or lower? Lower lah. Your cost is lower, you gain already what? How to be higher? So you minus out the 10,000 because of the gain. So 300 is the QP. So IA 20, AA is a plant. So we take 14%, 60. $42. That's your RE lah, okay? You just calculate that one. So the total CA is $1,402. Okay. So bring this figure back. 1402. So 8814 minus done 1302, you get 7512. It's just a total, you do it yourself, okay? So we get a statutory income 7512. Remember they mentioned you have an unabsorbed business loss in note 17. Unabsorbed business loss brought forward, which is 922. So 6590, that's your net business SI. Now what do you have after that? Section 4C. What's the interest income that we see here? Is interest income from an unconvertible loan stock issued by a listed company. Now this one, in the event if there is an exemption, the exemption is for resident individual, okay, for individual, not for company, okay. So there's no issue. We're going to tax this 26,000, and you minus the expense, which is just now we work out to be 6,000. So your adjusted statutory income is 20. So aggregate is 6610. Okay. Right? Now, after aggregate, what do you do? There's donation, right? Your approved cash donation, that maximum is 10%. Now, donation was 800,000, so you just restrict So this is my total, as well as my chargeable income. Okay. Finish. 26 marks. It's not too tough also, right? Okay. But you gotta be careful. Certain things you forget to adjust, then you made a mistake. Right, so this is part 1. Now part 2, they ask you explain the treatment of that compensation received. What's the treatment? Now, we say that the 38,000 is taxable income because it is to replace the loss of business profit which is also taxable in the first place. Okay, so the income is taxable because it's to replace the loss of profit which is also taxable in the first place. Right? That's it. Now, part B, this one Don't need to do. It's a bit beyond the scope of F6, so we are not doing. I didn't teach in the class also. So how? That's why in the exam we gave all the students 2 marks for free. Whatever you do, there's 2 marks. You don't do, also got 2 marks. Okay? So that's part B, because first time, first time. Okay? So that's why I'm not doing anything here. 2 marks bonus. Okay. So that's your question 1, question 2. Right, let's move on. Okay, question 4 is RPGT. I can't do this yet. Tonight, after tonight, you learn, then you can do it. Question 5 is indirect taxes. We can't do this. After next class, then you can do. Now, question 3 is on the CA side. Okay, so we come back to 3A later. After the break, we look at 3B. Now, examiner asks tax admin. Any answer you write, as long as it relates back to the case or so, we give you 1 mark. It's very easy to get the A mark. Unfortunately, those who fail are those who never write a lot. They write 1, 2 things. The examiner say that explain responsibilities of Malaysian company for assessment, estimation, payment of tax, submission of return under self-assessment system. Identify any exception for new company if their paid up is 2.5 million ringgit and below. Okay. We got to write 8 things. Number 1. Every company shall submit tax return by end of 7 months from the close of account. That's 1 point. Okay. Now, not very sure, give an example. If you are in the exam, you're not very sure, give an example. Because sometimes we will give credit to your example if you're able to express the point correctly. Example, if year end is 31st December 2012, Y12, the return for Y12 shall be furnished by 31st July 2013. How about tax? Every company shall settle its remaining tax balance by the end of 7 months from the close of account, failing which the outstanding balance is subject to a 10% increase. If still unpaid after 60 days from the increase, a further 5% increase on the total amount shall be imposed. Okay, so that's your responsibility for return, payment of tax. Okay, then how about estimate? Now, a new company shall furnish tax estimate and pay monthly installment. Estimate shall be furnished within 3 months from the commencement date. Of the business or of its operation. Okay, now for new company, tax installment shall commence in the 6th month of the basis period due by the 10th of the month. Now the existing company, estimate is when? 30 days before the beginning of the basis period, must be at least 85%, right, of the last estimate or revised estimate. You should pay installment beginning in 2nd month of the basis period. New company whose ordinary share capital paid up lah. At the beginning of the basis period for the first year of assessment is not exceeding 2.5 million, is not required to furnish tax estimate. And the same shall apply for the 2nd year of assessment if the OSC does not exceed 2.5 million as well. The company can make revision of tax estimate in 6 and or 9 months of the tax basis period. So just write any 8 things. Okay, so these are things we learned yesterday. Okay. So there's plenty of answers you can write here. So it's quite flexible. So some students, most students get very good marks here, but the only problem is they don't get enough points to get all the marks. So those who write a lot, they also get perfect mark. They get 8 out of 8. Okay, so that's why the issue is you must write a lot. Okay, write all that you know. Follow up. All right, now we take a break. Okay, we'll come back then we look at part A, the CA, then we'll see another set of the paper.